Hello, everyone. I'm Zach Massoum from the British Columbia Securities Commission. I manage the legal services team in the Capital Markets Regulation Division of the BCSC, and I also head our FinTech and Innovation team at the BCSC. Thank you, everyone, for attending this event today, both those of you who are here in person and those of you who are attending virtually. I'd like to thank the BCSC and the CSA staff that have put tremendous time and effort into organizing this event, which is, as far as I'm aware, a first for the CSA in terms of holding a national webinar of this type. In terms of how today's event is going to work, we're first going to have a 45-minute panel discussion with our enormously qualified set of panelists, who I'll introduce in a minute. I'll be moderating that discussion. We'll then pivot to a 45-minute roundtable in which we're hoping to get views and perspectives from all of you to help Canadian securities regulators as we consider issues involving data portability. That roundtable will be moderated by Ryan Clements, Director of Advanced Research and Knowledge Management at the Alberta Securities Commission. Those of you who are attending virtually, you can insert questions and comments through the Lumi platform, and we'll take those to the extent that we're able to in the question and answer portion of this session. For those of you who are in the room, we ask that you not play the webcast on any personal devices that you've got so as to avoid any feedback, but you'll be able to ask questions directly during the Q&A portion using the microphones that you've got. Given that we only have 90 minutes, I'd like to get right into the panel. So let me introduce our panelists, starting immediately on my right. We have Brigitte Goulart, who is Senior Counsel at Torys and co-head of Torys Consumer Protection Practice and FinTech Group. She is also a former Deputy Commissioner of the Financial Consumer Agency of Canada. Sitting to her right, we have David Hooper, who is Vice President, Payments and Open Banking at CGI. Sitting to his right, we have Abraham Tashjian, who is Director of Financial Services and Head of Open Banking at PwC Canada, and is the former Open Banking Lead for the Government of Canada. Beside him is Matthew Unger, who is the founder and CEO of iComply, which is a global RegTech company based in Vancouver that is focused on digital identity, compliance, and operational risk solutions. And last but not least, we have Khalil Jessa, who is Senior Legal Counsel at BCSC and one of the architects of our current data portability test, which is part of the CSA Collaboratory. So let's open this off by asking each of you to very briefly, if you don't mind, introduce yourselves in a little bit more detail and talk about how your experience relates to data portability. Brigitte, can we start with you?
Yes, sir. Thank you, and thank you for inviting me to the forum, and I really appreciate being in Vancouver. So my background, as was mentioned, I'm the past Deputy Commissioner of the FCAC, so I'm bringing here some perspective on from a regulatory role, and I work very closely with financial institutions, mostly credit unions and banks, as they try to manage lack of a harmonization in the regulatory sector. So I hope to be bringing some comments here as to how harmonization will be very important, because a lot of different regulators are currently looking at data portability, open banking, consumer-driven banking, and some of the comments were made in the submission dealt with that. So that's my perspective and what I hope to bring to the conversation.
You want me to go next? Okay. I'm David Hooper. As described, I work for CGI, and as a large IT services company, what we do, of course, is look at the technology. I'm a little bit of a misfit in that I'm looking at both the business and the technology. In our situation, we had built products and helped stand up digital banks in Europe under PSD2, realizing what was going on in North America and specifically Canada was quite different. We had to look at what are the changes in technology that have taken place, and there were a lot, and how do we align with the emerging standards that are coming towards us. And really, to the extent that where we call it open banking, I look at it far more as open finance. And with the people in the room here, you're definitely at that outer edge of finance away from banking, just to show that it's not a banking thing.
Hi, everyone. I'm Abraham Tashjan. I'm a director at our financial services practice at PwC, where I focus on payments and open banking. I'd like to first start by thanking Zach, Khalil, the BCSC, the CSA for giving me this opportunity to talk about open banking. It's a professional passion of mine in the sense that I've dedicated a few years of my career to help develop the industry here in Canada, as well as other countries I've lived in. It's also a personal passion of mine because I'm incredibly cheap and I'd love to track down the best deals that I can for myself, including from financial services providers. I've had the privilege of working in Singapore and Hong Kong for a British bank, working with regulators to develop the open banking or open API frameworks there. I brought that experience back here to Canada, where I advised the government on the second round of consultations on open banking a few years ago, which segued into my opportunity of taking on the open banking lead, where along with the industry, we developed the open banking framework that is now being implemented via legislation. My day-to-day is advising banks, fintechs, credit unions, and a variety of stakeholders on not only the compliance obligation that's coming with open banking, but as well the opportunities, specifically because our system will be designed materially differently from a policy perspective than others in other jurisdictions.
Cool. Hi, everyone. Good to meet you all. And thank you, CSA, for having us. Matthew Unger, CEO, founder at iComply. I've been, I guess my career started kind of more in the financial services side. I spent about 2 decades working in large FIs on different technology projects and kind of modernization of systems. About a decade ago, started really looking at some of the new technologies coming out and seeing that they were just not on even the landscape or the radar of a lot of the firms that I was working with. So started iComply. We have, you might know some of our work around what are referred to today as blockchain security tokens, or some of the collaborative work we did with another Vancouver company on what's known now as NFTs. So we worked on some of those initial smart contract methodologies, etc., and have done quite a bit of work around more digital identity and ethics and rights around identity. So helped to draft the first version of the UN Charter for Digital Identity, and also worked quite extensively with the FATF on what's known in the crypto world as the travel rule. So for me, open banking is, as a Canadian, I think I remember the first time I saw an app that allowed some screen scraping to do some basic budgeting, and as a technologist, it just was terrifying from the security perspective. So I'm really excited to see us moving forward finally on this in Canada.
I'm Khalil Jessa. I'm senior legal counsel at the BCSC. I work in capital markets regulation, but more specifically in our fintech and innovation team, along with many others who are also in this room. I mean, if the question is, how did I come to open banking? I have nowhere near the experience in open banking as our panelists, but mine comes from trying to understand and see where the market is going. And as part of our collaboratory, which we will talk about, it comes from making sure that we are on top of and in front of the innovations that are happening in Canada.
Thank you, Khalil, and everyone. So let's start off with data portability basics for those in our audience who might not be as familiar with what data portability is and what exactly is happening these days. So let's talk about the who, what, where, when, and why. In other words, what is data portability? Why are we concerned with it? Where will it apply, meaning to what data and among what market participants, and when is this all happening? Abraham, I'll turn to you first as Canada's former open banking lead and to continue what you touched on in your introduction.
Sure, thank you. And so I'll use open banking and data portability interchangeably. I think it's important to kind of level set our conversation by understanding what we're talking about here. And for that, I typically like to do a bit of a timeline investigation in the sense that I usually have a slide that looks back back at the history of open banking in Canada, I've started to sense that it's a little depressing in the sense that we're looking at about 8 years, 9 years of development. So I've left it out, and I figure it's better to talk about it. So the genesis of this concept goes back to 2017. And the reason I say that is it's the first time that the Department of Finance actually brings up this concept in a consultation of the federal banking system. And so in it, we start to notice what's different about our system and helps us understand the definition in the sense that in this first time, the government defines open banking as a way to give consumers authority and complete control over their data. So I think that's very important to understand what we're trying to accomplish in implementing a data portability or an open banking system, in the sense that we're trying to empower consumers with complete control over their data. We're putting the rest of this conversation about who owns the data. It's the consumer. So we're designing a framework behind us. In fact, the Consumer-Driven Banking Act that was passed last year, and I'll talk about where we are from a timeline perspective. In the beginning, I think in Section 3, re-emphasizes that by making it clear that the system is designed to empower consumers, to allow them to direct their information to any participating entity of their choosing. I think this is important because reviewing some of the commentary that came into the consultation, I'm not sure this is entirely captured in terms of where we are on the journey. So as I mentioned earlier in my introduction, I had the privilege of running a series of consultations where we essentially canvassed the industry and forced them to participate in 4 working groups. One that had to do with accreditation. Essentially, if you're not a bank or a credit union, what are the requirements that you'll have to fulfill to be part of the system? Security requirements, privacy requirements, as well as everybody's favorite, liability, meaning who's on the hook when something will inevitably go wrong. Anytime you implement a new system, something's going to go wrong. Somebody's got to be responsible. So out of that came a framework that I handed to the government at the end of my term in December 2023, which translated into legislation, which was passed in June of last year, the Consumer-Driven Banking Act. So although we don't have a complete set of legislation today in Canada that captures an open banking system, we have the first part of it. Second part was supposed to follow late last year. It didn't. So hopefully with this new government, we'll see that through. As to what was in there, I think it's very important to look at some of the key elements, because to a certain degree it was skeleton legislation. It was not complete, didn't capture every single element of the system. But there's some interesting points that followed up on budget announcements, fall economic statements that the government announced. First, in terms of scope, what type of information is captured? We have clarity around this in the legislation. So deposit accounts are captured, payments accounts, lending accounts, which could be, secured or unsecured, consumer provided information, which is just legalese for KYC information, as well as investment accounts, registered or unregistered. Now, I think there's a bit of clarity that's kind of missing there from the investment account. If you trace back to the advisory committee's work, the committee that preceded me and recommended my role, for which I'm eternally grateful to them, they talked about limiting investment account information to what you typically see on your bank accounts, right? Typical vanilla GICs or stuff like that, term deposits, not necessarily self-directed brokerage or similar type of products. So I think the legislation requires a bit of clarity from that perspective. So we have scope. In terms of governance, we know who's going to be overseeing the system. It's the FCAC, which Brigitte is familiar with. In terms of timeline, well, we're still waiting on the second piece of legislation. And from there, we're still waiting on clarity as to when it's actually going to be in effect.
Thank you, Abraham. That is an excellent summary. Is there anything else that anyone else would like to add to that?
Well, no one wants to follow that because that's great. I'll add, just take it down a layer from that. So what does that mean to the rest of us as what it is? I often refer to it as consented data sharing. But as Abraham said, no one's asking for data. Unless the consumer or a business signs up for some kind of service that needs the data to deliver value and benefit to them. And this is something that we talk about all the time in terms of there's got to be some type of service they want, whether to help them make better decisions, better informed decisions to improve their financial well-being, what have you. But once you sign up for that service, they need the data. And data all comes from an account. So as Abraham said, there's a list of accounts, quote, that are in scope for all of this. So where this has been viewed as a banking thing, those of you in the room, but I'll talk about wealth, investment, and insurance companies, you hold registered accounts, you have checking savings, you have seg funds. These things are all in scope that if I sign up, and I'll use an old example, Mint, because it doesn't exist anymore, but it works. If I sign up for Mint, I want to tell Mint where all my information is, including all of those sort of entities. And if I'm talking to my broker and trying to get a financial plan put together, I want him to have all of the information possible so that I get the most accurate plan from them. So when you look at the legislation side of it, the next step down is who needs data, where's it coming from, and what's the process for me to actually grant consent to release it to the chosen entities that I want to do business with.
Just one very small addition is that we're talking here about read-only data. Like the first phase of open banking is really the transfer of data, not writing. So you can't really go in and do transactions and so on, which is a big difference in terms of what may be happening in other jurisdictions in the world who have already moved on to the writing part of open banking.
Those are excellent points, and maybe we'll touch on what's happening in other parts of the world in a few minutes. For now, Khalil, let's turn to you. Can you spend a couple of minutes telling us about what the CSA has been doing on data portability and what we've learned so far?
Absolutely. If you want, I can start with talking about the collaboratory, which is where our data portability discussion paper is currently housed. So the collaboratory is an initiative across the CSA to create essentially a sandbox where individuals, companies, registrants, service providers, CSA, people from across the CSA can come together and collaborate in order to create fair and efficient markets while ensuring investor protection. And what that means is that we can create a space that has parameters within which registrants can operate. They can test out new and innovative ideas without having investor protection be a concern from our perspective. So from that, we had to launch our first test. And our first test was on data portability. We looked out into the market, we looked at what's going on out there, and we looked at what's happening in Canada and around the world, and we realized this is a space where Canada, to some extent, maybe lags behind other countries when it comes to data portability. But at the same time, there are, as these individuals are talking about, initiatives that are pushing forward data portability in Canada. And the question for us within the BCSC and the ASC, which led this project, was where will securities legislation and our role prevent this or restrict this or have any impact on data portability moving forward as an innovation in Canada? And so the best way for us to figure that out was to draft this discussion paper, which we'll talk about in a minute. But we drafted this discussion paper. In it, we had 24 questions. I found out yesterday from a researcher that came here who said, actually, we had 42 questions if you really look into how many questions we had. And we got 19 responses to those comment letters, which is, on our standards, actually quite good, given the amount of questions and the niche component of data portability in Canada.
Thank you, Khalil. That's great. So let's turn this to the capital markets ecosystem specifically. Can I ask each of you to give us your thoughts with respect to what the benefits are and what the opportunities are for market participants in capital markets when we're talking about data portability? Bridget, can we start with you?
Sure. As being a consumer protection expert, I've got to start with the consumer. So I think one of the benefits would be to minimize the friction that consumers might have in having to share the same same information over and over, where they can provide their consent and making sure that the information is shared amongst the participant that need that information for KYC purposes. Some of the challenges with that, there's many challenges, but some of them, and I'll just name a few. The first one is making sure that the information that is shared is accurate, correct, and appropriate to whom it's being shared. So information that is being shared, for example, with a banking platform to purchase a product from like the GIC on a banking platform, the appropriateness test that applies to banks is not the same test that applies to suitability when you're dealing with a dealer. So you can't assume that the information collected from one party will automatically be the right information for the other party. The second challenge is the consent. Has the consent been provided for the right transfer? But I think a big challenge, and one that is sometimes forgotten, is the regulatory burden that comes with having sharing that information in terms of what rules will the dealer be subject to if being asked to share information that is collected from a bank, for example, on the GIC, because they may actually also inadvertently be subject to now some banking requirements because the person is getting information from a banking customer. So there's definite consumer protection advantages, but there's also things that you need to be concerned about when it comes to having to comply with regulatory burdens.
Thank you. That's really helpful, Bridget. David, I'll turn to you. And since we're talking about both benefits, you might as well talk about benefits and the challenges that come with it as well, if you like.
Sure. My mind naturally drifts to the why, like the so what of it. Why do we want to be sharing data? What are we going to do with it? And that leads to the benefit side. So if I use the example of advisors, but it could be anywhere within the value chain. What are you going to do with this data? And that drives what data do we need access to? And then the consent components of it, the liability components, all of that. So as an advisor, I want that 360-degree view of my customer. The customer is getting a lot of that from their banks and credit unions, what have you. We've all had personal financial management software that categorizes your spend and everything like that. But from an advisor, it's two things to me. One is in my financial planning process. So I want financial planning information to allow me to provide that better plan. And the other one is with, let's call it the wealth management or the investment aspect of it. I want to know about asset allocations. I want to look at retirement funding from numerous different mechanisms or products that they may have that are generating revenues. So from an advisor standpoint, that's where I go with the what's the benefit? Well, the benefit to the end customer is better advice. It's better services. Again, as we've all said, take away the friction. If I can generate that monthly retirement income from 4 different investment sources and have it all deposited into their account bi-weekly or monthly, then I've done something that they don't have today. None of us have today, really. So I need the data to understand where everything is. I need the data to get the best view so I can understand the asset allocation aspects of it. I need the data to then be able to deliver. And Bridget didn't take us down the road of read, write, and I won't go there either. But that's the end goal in the future, is to be able to actually not just provide advice, that actionable insights, but then to execute on it. Would you like me to do that for you? Yes, I would. Hit yes, and away they go. So that's where I see the benefit. It's take the data, what's the service you're providing, and then there's numerous use cases where there's a benefit to both the advisor and the industry, as well as the consumer or customer.
Yeah, my fellow panelists have done a great job explaining the benefits. I typically look at it from 2 angles: process and product. From a process perspective, I try to determine what data can do to facilitate many of the processes you have to enrich or even onboard new clients. So just think about documentation that a client has to sign up to early on that may be laborious, that may lead to drop-offs because of the process, because of the appearance, the design, you name it. There's a variety of reasons. And just look at how data sharing can facilitate the population of those forms by relying on on an existing stakeholder within this ecosystem of vetted ecosystem participants who could share that consumer data that you both share in terms of a consumer. So that could be very helpful in attracting new customers and really facilitating the transition. I speak from personal experience. A few years ago, I was transitioning from one role to the other and just transferring some of my pension benefits led to months and months of forms being filled out, where at the end, I won't name names, but essentially a physical check was issued, a courier took it and delivered it to my bank. This shouldn't be the case in Canada, right? Not in this day and age, but it happened and it was a couple of years ago. So think about the way data can facilitate that process. From a product perspective, I think the way we've designed a system spares us from trying to determine what the potential is. Now, I know that sounds a little controversial, but I think it's important when you're designing a system not to champion certain products, not to champion certain use cases, because use cases get old really fast. So if you have a legislative system or a regulatory framework that tries to champion any of them or is designed in a way to specifically focus on those, I think that system becomes pretty old pretty fast. So the way that we've designed it is essentially focusing on the scope and taking that scope, passing it on to industry and letting them innovate. And there's millions of use cases that you can rely on. We typically call ourselves fast followers. I think at this point we're just followers. It's taken a couple of years, as I mentioned. The benefit of that is looking at what others have done. In the UK, for instance, the implementation entity has a website called the App Store, which I plagiarized from extensively. Plagiarism is good for tech, it's good for Abraham Tashjian. But there's so many great use cases there in terms of what you can do with data. So I encourage you to take a look there, as well as in Australia, a maturing market with a lot of opportunities in terms of what we can import here.
I can't tell you how happy I'll be when they pre-fill all the forms. That would just take all the friction gone right there.
Yeah, I think it's important to think about what we have today, which is like a system of infinite copies, basically. Every time you open an account somewhere or you go anywhere, you show some ID, they take you down your name, your information, you start providing documentation, they make copies of that in their system. And then you go to the next place and you do the exact same thing and everybody's got a copy of your information. I personally have been a victim of identity theft due to a manager in a specific location walking out with a bunch of, this back when we had carbon copies on credit cards, walking out with a book of these things and, exploiting a whole bunch of customers of that organization. But, if you've gone through something like identity theft in Canada, or there's examples of people being mistakenly identified as dead, there's all sorts of things, and your whole life grinds to a halt. And it's years and years of recovery. The system that we have today centered around identity only recently in the last couple of years were if you wanted to digitally onboard somebody, you were required to send the data to a credit bureau. There was no alternative method. And you just have to look at, history of just Google hacks and the name of one of those agencies, and you'll see that data breaches happen on a very regular basis. So this system of infinite copies isn't working. The social contract we have with major tech platforms, social media platforms is absolutely ridiculous. And we need to move to this point. And what I like about what I'm seeing in Canada is this move towards the consent and the control being on the consumer. Consent has to be not just like very clear and informed, but also revocable. And when we get into the fact that we are Canada, we're not anybody's 51st state, data also needs to stay here. It can't be running over across borders and going through all sorts of other places. So when we look at the architecture of these systems, the ability for me to have one identity and walk into a bank or talk to my mortgage broker or buy a house or who knows what other, cross a border, the ability to have that move with me and my data moving with me and me having control over who is seeing and viewing and refreshing that data is very important. And I think it's something that we really need in Canada.
Thank you, Matt. Khalil, would you be able to spend a minute or two telling us about what we heard from commenters in the CSA Collaboratory regarding this issue?
Yeah, absolutely. And I see there was a question as well about whether or not these comment letters will be made public. They're not public at this time, but I can talk to you about some of the information that we got from these comment letters. First of all, I want to thank the industry for providing those comments and for the engagement and this engagement today as well, which is phase 2 of our data portability test. So I'm just going to tell you a few of the things that we heard from industry. Generally, there was a few comments talking about that provided sort of strong support for harmonization and even standardization when it comes to data portability and eKYC in particular across federal, provincial, and industrial lines in order to reduce the regulatory burden that that industry feels and increase interoperability between these different systems. There was also a lot of talk about aligning our securities framework and our approach to data portability with that of the consumer-driven banking framework. Privacy, security, meaningful client consent, all things that you guys have talked about, came up quite frequently. Some very interesting suggestions when it came to technological innovation, including using decentralized identity, verifiable credentials. What can blockchain do in this space? What can AI do in this space? All came up within the comment letters. Inclusion and investor experience also came up with the idea that this innovation or this move forward will improve the investor experience and increase inclusion. There was also an emphasis on education and transparency, making sure that investors are educated and they understand their data rights, what portability options they have, and their need to consent to their data being sent around. Risks of data misuse, breaches, and inaccurate or outdated information were highlighted as a concern in particular, especially when it comes to, revoking that consent or, the fear of, let's call it the honeypot, where a lot of data of a lot of different people is housed in one place for efficiency purposes, but maybe that's not the most safe way to conduct this data portability. So that's just a few of the insights that we gained from this discussion paper. And we hope that through this forum and other forums as we go forward, we're able to delve in deeper to the things that we learned in that discussion paper. And hopefully and possibly that might lead to us being able to test in our collaboratory a solution that works for the securities framework or addresses any sort of impediments that may exist within our securities framework to help this innovation move forward.
Thank you, Khalil. That's really helpful. So we're almost out of time with this panel. I'm going to ask one last question, but I do want to make sure that we have some time for Q&A for this panel. Just a reminder to those of you who are on virtually that you can put your questions into the Lumi platform directly, and we'll see them and endeavor to answer them. So one last question, which alludes to something that you were talking about, Khalil. You talked about decentralization a little bit, decentralized identity, and then you also talked about the idea of a more centralized utility that could act as a clearinghouse for information. So I'm interested in thoughts that any of you might have, and please feel free to just pipe up with respect to the value of one versus the other in Canada.
So Abraham's like ready because this is one of his favorite topics.
I have some thoughts. So look, I think the way markets have developed, both globally where you have legislation and in vacuums here in Canada and the US, forcibly there's been some intermediaries that have staked a certain claim in the market and acted as connectors to banks, to fintechs, or any other data providers, right? They've grown their presence and they've leveraged their relationships with both sides of the parties to facilitate the transfer of information. Because forcibly, when you introduce a data portability framework, there's a whole bunch of tech work that has to happen in the background. So the business model behind these intermediaries, typically aggregators, is to connect once, and you can leverage my network of various banks and fintechs to pull information from a single source, making it easier for you to connect to one point as opposed to many, theoretically. Now, we haven't seen a single entity really dominate the market. There are some leaders, but essentially what we have today is choice. And choice has led to competition and innovation in the intermediary space. We typically talk about it in the financial services space with fintechs versus banks, but aggregators, these intermediaries, are also competing with one another to sell their network, the extent of connections to anybody who wants to leverage a data portability system. And with that competition, we've seen a lot of innovation in the fraud space, in the digital identity space, really offshoots of data portability. So I think there's something to be said about having multiple organizations serving this purpose and letting a healthy competitive market develop to see where the products can come from. The alternative to have a central utility that essentially acts as the de facto or the legislated point of connection, to me, raises a couple of issues, other than the obvious cybersecurity technology honeypot, right? There's also questions of efficiency and whether or not this actually saves time and money. The Australian experience, which essentially went down this route to later realize, and this is in the energy space, that it didn't really deliver on the promise in terms of efficiency and cost, can help us understand that. But if we want to allow a healthy market to develop, I don't think we should have a single utility that is acting as an intermediary. That utility will be new and in a business it is unfamiliar with, as opposed to really gigantic companies at this point that are doing a relatively good job safely and securing exchanging information between different parties.
Maybe like this conversation about centralization versus decentralization has been something I've been involved with for over a decade now, and I think it's important to think of it as a spectrum, right? And you have all something you might call completely centralized, or something that somebody might say is a completely decentralized network. And even in the example of the most decentralized networks, and I'll pick on something like the Bitcoin network, there's choke points of centralization among foundations, among mining pools, hash rates, etc. And so the idea that just because you throw, and I'll pick on a blockchain, just it's going to be better. There can be a lot of issues with that. I think personally, very strong on this is pure opinion, but the best thing that we could possibly have for true digital identity in Canada would be something that was orchestrated and run from a government perspective and used by market participants. But I don't think that's likely to happen for many, many reasons. And even if it were, I think the possibility of them getting it right is exceptionally low. So it might be better that we have a market-driven approach. But the idea that you have to therefore centralize doesn't make any sense. We have a lot of examples of decentralized technologies that can run according to specific protocols without necessarily following, let's say, a centrally governed standard or protocol, without actually operating from a central location, being able to run individually. And I think that's the type of technology, without getting too far into solutioning, that we really need to look at. Blockchain is really not very appropriate for a lot of digital identity, DID, VC frameworks, kind of misunderstand a lot of the use of what I need this information for. And that being said, even open banking, the idea of continuing to share the information, we're still like 10 years behind the 8 ball on this. Like, it's not about sharing information, it's about reading your information. One individual, one profile, I control it, and being able to read from that rather than me sharing with all these different entities just to recreate essentially the same thing that we have. So there's a lot of nuance in how this gets done.
I'll just add a little bit. Excuse me. I think I draw the distinction between a utility and a commercial entity that's playing in the space. And Abraham, you said it well. There's 3 or 4 in Canada and North America that are playing in that, and they start off with, we have a service, we'll help you with data analytics. And then it becomes a connection service provider, and I'll connect the world. And then they're building ecosystems where there's other services. And that's all fine. I mean, if you don't have the wherewithal, be it the technology or the resources and the budget to build what you need, maybe this is an alternative to you. But that's very different from a true, in my words, industry utility. We've only seen a couple. There's a couple in the payments world, but that's really, at an industry level. Payments Canada, I would view as an industry utility, and some of the things that they and Interact are building. But beyond that, there aren't utilities. There's commercial entities trying to expand and grow revenues. So you may have need for and be able to make use of that, and it'll help you with your time to speed to market or your cost structure, but they're not necessary. You can absolutely, in this type of world, go directly to them. And we've seen, as everyone said, there are times when they actually become an impediment because of the cost structure and extra layer or extra hop, right, that fits into the space. You don't need it, but you may need it yourself. But as a whole, we don't need that centralization.
Thank you. And I do realize these are great comments. I realize that we've got a variety of views on this issue, as Khalil, you alluded to when you were talking about the comments that we received. So that will be a great lead in a few minutes to the roundtable that we're going to have, which will be an opportunity for everyone to provide all of their views on this as well as other issues. So let's take a few minutes for Q&A. I'm going to read one that is virtual, but those of you who are in the room who have any questions for our panelists, please feel free to either turn your tent card sideways or line up at the microphone at the back, and we'll try and take your question. So the first question that I'll ask is actually with respect to government data. So the question is government data in scope with all of this, or does I presume it's referring to the consumer-driven banking framework, does it cover only private entities? And as examples, the person who is asking the question referenced data that comes from CRA and CPP contribution history. Would like to answer that?
I can take this, sure. So the way the legislation and the framework has been designed, it doesn't necessarily target entities other than a select few that the government has said will mandate participation. It refers to financial institutions of a certain threshold. I don't think you need to be a rocket scientist to determine that's, the big banks in the country will be mandated to participate. From there, we move on to scope in terms of whether or not this information has to be shared. So provided you are a system participant, whether you've been mandated to participate or you opted in to join and you have this information, you'll have the responsibility to both share it as well as collect it. I was mentioning earlier that one of the policy objectives is empowering consumers. That doesn't mean that we're not trying to punish incumbents or redress certain market behavior, and that's translated into certain features in the system, reciprocity being one of it. Now, going back to the question whether or not government information would be included, I would assume provided that a government entity would join the system, would opt into the system, and they have what is in scope, theoretically, yes. And in fact, in the fall economic statement, the previous one, I believe the government made reference to crown corporations acting as banks as being potential participants in the system, which I think is a reference to the potential of data portability / open banking for governments. We have an example in the UK where that government relies on open banking to collect tax payments relatively fast and quite efficiently. So I don't see any restrictions in terms of a government entity deciding to opt into the system. Frankly, I think that would be a great development.
Depends on the data they've got as well, right? Actually, I'd love to get your opinion on this. If you're the original source of the data, that's where most entities are going to want to go. But if we're aggregating aggregators, what has the government got that someone's going to want? Because most of it they're getting from other sources. So I probably want to go to that direct source, but there may be something there. It's the aggregator of aggregator question is what I was going to throw at you. It's like, does it make sense? And
right.
Reciprocity gives us that, but
good point. And I think there's something to be said about derived data on this point, in the sense that you're collecting information. Your obligation is to share it in its raw original format. And the reason the government made reference to that is to preclude any ways of tokenizing that data, which is technical jargon for essentially I'm sharing with you, but not really sharing it. So out of this concept comes something called derived data, in the sense that if you as a data requester, let's say you're a bank or a wealth manager, a fintech, you've collected information that your consumer has consented to you pulling from another institution, and you've enriched that information, right, with internal models or whatever you have internally, that output doesn't have to be shared. That's what's called derived data. But the original raw data has to be shared, provided you are a system participant, and that speaks to the rest of the reciprocal obligations that you have as an ecosystem member.
And in regards to the question around government agencies, I think, or government being involved, there's definitely an aspect of like how much information do you want to have shared, but this also should be very. I think one of the areas that we need to be very explicit with is things like how do we inform consent? How clear is it? You know, it's pretty appalling that the best examples of consent management might be people's experience with using Facebook and seeing who has access to your platform, or having a verified profile off of LinkedIn. Like, these organizations don't have maybe, you know, Facebook at least doesn't have the greatest track record with what they're going to do with your data and what that could then be used for in all sorts of other applications, especially with derived data. So I think one of the things, derived data also has to be very explicit that I'm going to be using your data to create a derivative. And that might even require a change in not only the social contract, but the contractual terms between the individual and the recipient taking your data. But the other thing, you know, from government agencies, CRA is a good example of this. They're on a, log in, use your different systems to log in into CRA, but that's created a incredibly steep increase in fraud. And so we have to have this ability to see where my data is being shared so that I know somebody else isn't using my identity to go and log into my CRA and pull information, or use that to go and take a mortgage out in my name, which are all examples that we've seen with the current systems that we have. And so the ability I think it all comes down, the individual needs to have the power and that control of the consent to see requests coming in and know, hey, this isn't, I didn't ask for, for TD to access my information. Some of that must be somebody else, or whatever institution or capital markets firm, et cetera. But in the aspect of government agencies, there are quite a few crown corporations that are built for the purposes of generating revenues specifically around some of these things. And I do think that this is creating, one, honeypots, and two, it's really obfuscating the whole market and the aspect of having a very Canada-wide approach when we see especially certain provinces really leaning in on controlling it for the aspect of generating revenue being the primary driver.
I just want to make one small comment about the question about what's in scope, because as Abraham mentioned, the large banks will be required to participate. Nobody else is required to participate. And this will create potentially, most likely, a parallel world where you will have the large banks that are participating entities subject to all kinds of requirements, but then you have the rest of the world who will be waiting on the sidelines to see if there's a real advantage to becoming a participating entity. So, and there's nothing that is banning screen scraping. So you could still have a fintech sending a request from their customer to a bank saying, can you please share the information of that customer with me? Fintech is not a participating entity. It's not going through the technical standards that have been approved. And, we've looked at other jurisdictions, and until they ban screen scraping, until they force everyone to participate, not that many people have participated.
But we have to be careful about the way we phrase it even, right? You're absolutely right. But they're not going to come and request the data. They're going to log in as if they were the user because you've given me your username and password. So they're requesting if an entity that then can get to the bank to request my data, there's a number of tokens, safeguards in place. The bank will go, I don't know who you are, go away. You won't even get in the door to get anywhere near the request.
Well, I'm not sure about that, because I spoke to a bank about that. And I said, are you going to ban fintechs that are not members of participating entities? And the answer was no. Like, if we're getting a request or a demand from one of our clients through a fintech, as we currently do, let's say, for example, Mint doesn't exist anymore, but like they did for Mint, they didn't stop the sharing of the information.
But that was screen scraping. Whereas if you're coming in through the framework, I have to be able to validate the entity that's coming in.
But that's what I'm saying, is that many of them will not be coming in through the framework.
Well, they won't be able to, let's say it different. They won't be able to request it. They're just coming to take it because they can log in.
Yes.
Okay.
Yes, absolutely.
We're violently agreeing.
No, I agree with you, but it gives sometimes it gives the impression that, as soon as Consumer Driven Banking Act is in place, that everybody's participating participating, and that's not going to be the case.
I think these are two great points to end off on. Number one, the risks of operating outside the framework to consumers in particular. And number two, where capital markets participants come in, even though they are not the large FIs that are in phase one of the consumer-driven banking framework.
And the legislation recognizes that, because that if you are kind of representing yourself as a participating entity, there's actually a penalty that will be imposed on you because you're making your customer believe that maybe you are a participating entity.
Absolutely. Okay, so that's all the time we have for the panel today. What we're going to do now is our panelists are going to come down and sit with the rest of you who are in the room, and we're going to turn it over to Ryan Clements to lead the roundtable. Thank you very much.
Good afternoon. Let's get started for the roundtable. My name is Ryan Clements. I'm the Director of Advanced Research and Knowledge Management at the Alberta Securities Commission. I'm also the Chair of the CSA Financial Innovation Hub. Thank you to those of you joining in person. I also welcome those of you joining online. I do have access to the chat online, so I can facilitate your comments. So as we go through this roundtable, for those of you who are participating online, if you have comments, please put them in the chat, and I can discuss them with the room. Let me just start with setting out the objectives of what I hope to achieve in this roundtable discussion. We will go until noon, and also a little bit of the process. So let's just start with the objectives and what we hope to achieve. So we published the multilateral consultation paper, the discussion paper. And the reason why we did this is because we launched the CSA Collaboratory as an agile mechanism to engage and facilitate innovation in capital markets. We saw data portability as a potential testing theme for a number of reasons. We saw how governments around the world, which were these legislative amendments were referenced in the panel that we just had, identifying ways to give consumers greater control of their data. We saw the benefits of data portability, things like reducing switching costs and facilitating reduced frictions in client onboarding, eliminating screen scraping. So we became aware of this trend, this legislative trend. We became aware of the potential benefits around data portability and potential risks associated with it. But we wanted to understand how it affects our market participants. And we wanted to understand how we might be able to craft a testing environment around this, where we could study the benefits in a live testing environment and also work to help safeguard against the risks. We decided to move forward under this collaboratory framework with an engagement process, where we put out first a discussion paper with examples of what testing environments might look like, and we set out a series of consultation questions, and then we identified in that discussion paper that this test would proceed in phases. Phase one would be the publication of the discussion paper and the comments that were received. Phase one has been completed. Phase two is starting now, today, where we would engage in industry feedback and forums and discussions to help us identify the risks, the benefits, the implications of these other legislative enactments, and hopefully inform what would become phase three in the future, which is a potential live testing environment. So this public forum is the launch of phase two. What I'm going to do is I'm going to go through some common themes from the questions and the submissions that we did receive from phase one. And in these common themes, I'd like to have a few discussion points where we can gather feedback. Now, it's possible that we'll do more of these public forums where we can continue to gather feedback, and hopefully over time we can be able to understand how to most effectively craft the testing environment itself in phase three. There was a question that came out about whether or not the comments provided on the multilateral discussion paper are public. Those are not public. This was not a consultation paper in the traditional sense of us looking at rule changements or amendments. This was a feedback. So these comments are not public, although we are contemplating having a final report where we do share the learnings after we get through phase 3. So that will come. But I will share in this context some common themes that we can have discussions around. I will just say a moment before we start this, just for process, if we could use the same process that we were using in this morning's Chatham House session. So if you have a comment, please just place your tent card vertically and I will identify those. And to those of you who are attending online, please also indicate your comments, and I will facilitate those through the moderator board here. So let's start with the first question. So in the discussion paper, we identified 2 potential testing environments that we had. And these aren't exclusive of the only testing environments that we could have, but we felt that it was useful to at least identify an example of what a testing environment could look like. So we identified one where we had an eKYC portability service provider that held client information. You have clients who are interested in utilizing this service provider, and then you have registrants who are potentially part of a network of organizations who work within this kind of ecosystem. That potentially could be a testing environment. We identified another one where we had a direction where you have a client who's operating with one particular registrant and they want to be able to access another one, like a crowdfunding portal. And so they would have the registrant direct their eKYC over to this crowdfunding portal. That was another potential testing environment. But I want to start with a much simpler question in terms of feedback from you. We, in the comment letters, a very common submission was that this testing environment, if we do it, it needs to align with the forthcoming federal framework and avoid duplicative standard setting. And there was at least some sentiment that maybe it's premature to have this phase 3 testing environment. But in the same respect, we also received comments saying not only was this testing environment an interesting thing, but that they would be interested in participating in this testing environment. So I'd like to just start with that as a discussion point first. Is a phase 3 testing environment, is it useful for us to figure out how to build, or should we wait on this until the federal framework has crystallized? Let's start there. Yes, go ahead.
Do I have to hit the button? There we go. Perfect. Okay, David Hooper, CGI. I'll just say we've done this a couple of times and been down this road, and we have people asking, if I don't have all the details, can I do this? And I would say there are no regret actions you can take now. You'll indicatively be correct. There may be slight changes, but I mean, we know effectively what the API standards are. Your objective is to understand what data of different types from different sources. Where is the data? What does it look like? And how do I transform it into what would be consumable by whoever's participating in it? You can certainly do that now. I know for our own sake in banking, we've connected to 5 different core banking systems to understand what's it look like on their systems. Because if I refer to as native APIs, you need to understand how the information is generated and stored in those core systems or the source systems. Then you've got to extract it. You may have to normalize it to be able to deliver it in the specified formats. So you can certainly do that now. If the API spec were to change, say from FDX to Open API, that's not a big deal. It's just I changed the mapping. That part itself is there. You also want to play with and understand the consent management components of it, which is I have to be able to validate and verify the entity that is coming and requesting data, that they're able to access my APIs, that I can shut that off at any time. I can throttle it in terms of the speed, what it does to my system, because I could get, thousands of requests per hour, per second. I mean, there's all of those good things you can do in terms of performance testing. And then the other component is the customer experience side. And that could be one of the entities within your industry, or it could be their end consumer. I would want to know the consent management journey and the ability to then revoke consents and all of those pieces. So you should be beginning all of that now. You can develop your own use cases, but that core infrastructure, you've got enough information to be, 90% correct, and then make adjustments.
Anyone else on this?
I'll follow up that. I agree a lot with what David was saying there. I think there's, if we look at the frameworks that have happened in other countries, whether it's ADHAR in India or SingPass in Singapore, what Australia is doing, what Estonia did, nobody got it right. So no matter what, it's like the launch of the internet, we used the tech that was available, not the best tech. And no matter what we do at the federal level, it's probably not going to be perfect. And I think if we get started, we have some clients not in financial services, but in other in Canadian healthcare or other paramedical services, et cetera, that are already using very much the same framework and learning from it. And that's really key. Is there's so much more beyond just what's going to come down from the federal framework about learning how to do this. Consent management's a huge one, and just how do you even deliver this at scale to the consumers.
Thank you. Have any comments or thoughts on the two examples of testing frameworks that were in the discussion paper themselves? So as I referenced, we identified one where you have an eKYC service provider, you have registrants, and you have clients. And so we have to identify the proper frameworks in terms of the consent mechanism. And we also got quite a bit of feedback that we needed to provide more guidance around the parameters of National Instrument 31103 and potentially exemptive relief in those to ensure, because the registrants, they can't delegate their KYC obligations. And so we would have to give certainty within this testing environment that this can happen, that they can utilize this eKYC provider, and then the clients can also direct from the eKYC provider as well. We also had an example of a testing environment where there wasn't an eKYC provider, but rather was just a porting from a registrant to another investment opportunity, like a crowdfunding portal. Is there any feedback on the design framework of a potential testing environment that would be useful for us to hear?
The whole idea of having that as call it a centralized utility, I think we're definitely in the open banking, not in the digital identity landscape. And personally I don't see much difference to, what I have with like LogMeIn or some of these other tools where there's no validation of the user who's doing the sharing. And actually the idea of removing the dependency of requiring me to verify who's coming in. This is a major issue that we have with the infrastructure we have, even with the stuff that CRA ID has. There's a lot of cybersecurity vulnerabilities. And then on top of that, you're creating a centralized honeypot. So I think we would much rather see, in the stakeholders that we're engaging with, much rather see something where the infrastructure itself may be running from some sort of a KYC provider, but they're not the harbor. They don't hold the data. They're not the broker of the data. They're simply, the traffic control routing system would be, I think, much preferable, especially when you see how systems like that performed in India or Singapore, even Estonia. It just didn't take off and had to be deprecated.
That's good feedback. In 2024, the Alberta Securities Commission, the BC Securities Commission ran a market-facing survey with registrants to understand the challenges and the developments they face with respect to digital ID and whether or not there was interest in developing digital ID solutions. We received feedback from the survey participants that they were interested in this, but affordability and availability was a challenge. And there was also some uncertainty as to whether or not they could utilize digital ID given the current regulatory architecture, particularly National Instrument 31103. So let's stick with digital ID. Is that something that we should be looking at because if the example that I cited, which is in the discussion paper, the centralized eKYC provider providing, a honeypot, if you will, and that us creating in terms of cyber and privacy and other types of risks, even within this constrained testing environment, is it more useful for us to pivot and say maybe the way to look to this in terms of a testing environment is digital ID? And if that's the case, who builds that? Because it's not one of the concerns that we've had internally is this the regulator who builds the tech architecture? And it would presume not to be us. We would provide the guidance around the necessary regulatory relief within this particular testing environment. But does anyone have any thoughts on that idea, digital ID, and anything else in tangential to digital ID? Yeah, go ahead.
Maybe it's more of a clarification. It's John from the OSC. In terms of digital ID, are you referring to not only the ID verification part, but just collection of personal information and other personal characteristics of a particular consumer? My understanding is there's digital ID providers that are out there that do verification processes, and there are providers out there that do collect information about investors, a certain information beyond digital ID. So those ones that provide services or technology to registrant firms, for example, that collect a much broader scope of information. Just want to clarify that just to set the scope for everyone else.
This kind of gets to a question that we would have behind the scenes of the CSA Financial Innovation Hub, right? Like, what is the objective of this entire thing? The objective of this entire thing is that we're seeing new technologies, we're seeing potential benefits of new technologies, potential risks of new technologies, and as the CSA Financial Innovation Hub, we have a mandate to actively facilitate innovation in the capital markets. We also have the ability to build out these testing environments. These testing environments might be engagement forums, they might be feedback forums, which facilitate information gathering for us, but it could be more specific and more technical, where we're actually saying, here is a space, here's the relief that we are going to give in order to facilitate this operate. Because the market can order how the market orders. The market doesn't need the regulators to facilitate the digital ID solution or even eKYC solution. But from the feedback that we've received to date in both the survey and in the comment letters, some marketplace participants have suggested that our rules are somewhat ambiguous as to whether or not they can even utilize these services. They can even utilize the eKYC or the digital ID. And so as the CSA, we are here saying what parts of our rules are ambiguous that are serving as a friction to this. And once we can identify that, is there value in us creating some type of a space where we maybe give some relief from some of these rules, or give a green light to test within this space so that the market can order without, or so the market can test without the rule ambiguity? Does anyone have any thoughts on that idea?
Yeah.
Yes.
So no doubt you're in touch with the provincial governments that have been working on that sort of thing. A number of them, 3 were in alignment, a couple of others doing their own thing. As part of that, there were experiments into both the creation and validation of identity, or tokens. There was a lot of blockchain and things like that. And Matt probably knows a fair bit about some of those. One of the things that a number of bank executives have looked at is, would they be the natural stewards of identity? Well, possibly, but you could also look at that within your industry and potentially as the CSA or the provincial entities. Would there be a role for you to be able to create identities and then validate? I think in a decentralized world, we're most likely going to have quite a number of entities that are viewed as trusted sources for either the creation or the validation of identity. You could be one of those that can also move things along in the space quicker than governments. Governments generally have difficulty agreeing between each other, or you get 3 of them, but then someone else goes in a different direction. So think about building out beyond a provincial type of identity. Look at it as industry specific. My gut feeling is that we'll all have wallets with multiple identities in there, and rarely will we see just one single accepted entity. A national passport, maybe that one does, but every province has got to issue a driver's license and a health card. So there's another layer down below at sort of a commercial level. You could have multiple identities stored in a wallet.
Yeah, like almost like an investment passport identity potentially for us, right? Like that, and that's an interesting idea. I guess the question is, who develops it? Would it be us, and how does that get done? Does anyone have any problem? I'm going to pivot to
Sorry, one last follow-up.
Yeah,
say, this is also an opportunity to revisit your eKYC process and what's needed as part of it. This could be, let's change it from what it is today to another thing. Now, again, I'm not an industry expert on your industry, so I don't know all of the elements of an eKYC, but if I view it as a KYC from a banking perspective, I'm onboarding a customer. I want to validate, I want to see their driver's license. I want to get a TransUnion score, an Equifax score. I'll build it from 3 or 4 different sources, and then I'll make my decisions from there. That's all coming from other sources. So there may not be ever a request for me to then share that with someone else. If your process is similar to that, what's the actual sharing of the eKYC, or why is there one entity when there's multiple sources and then it's all proprietary after that? So I would just suggest make sure you look at the process and assess it. Is it ripe for change or innovation?
Okay, that's good.
Yeah, I think one aspect of the question, should we move towards digital identity? In my opinion, would be yes. We're kind of behind the ball on open banking already. But the other aspect is, one of the things that the regulators can do is be involved in a lot of just public education in this space, as well as signaling that this is an area that Canada is actually going to move in and lead in. The fact that here we're asking questions like digital identity, is that the same as eKYC? Is that the same as digital identity verification? From a definition perspective, digital identity is this wallet or container that, in my mind, that David's describing, versus digital identity verification is that eKYC process. And working in that eKYC space, I know that there's very little transparency or disclosure by vendors around the quality that went into ascertaining that identity. And it's incredibly opaque, and especially when you get into international vendors. But when you're dealing with something that's digital identity, it actually encapsulates, you can't have a digital identity unless you had robust identity verification to create that piece in and of itself. So one, I think there's definitely, we need to be moving in this area. We have customers who are, again, not in the financial services space, but adjacent to, like, end of life. There's like 3 to 5 million Canadians dying in the next 10 years. And being able to have a family member or an executor or somebody be able to help you transfer assets, clean up your social media account after you die, all this sort of stuff is actually all something that, is being accomplished with a digital identity solution outside of financial services. So I think there's a lot of opportunity to look at the digital identity piece over just strictly the open banking within the scope of the current regulation or legislation.
Great comment. Okay, I'm Khalil.
I'll just be really quick. It's just an interesting sort of insight from our consultations that we had before writing the discussion paper. It was really hard to find any entities in Canada that are doing eKYC to the level that would be necessary in order to fulfill our KYC obligations under the securities framework. And I thought that was very interesting that doesn't exist or barely exists in Canada, whereas I think more of that exists elsewhere, around the world. And it could be, in my view, that there isn't a strong business case right now for that, or is it that there is a impediment within our legislation, securities legislation, that is preventing people from actually building the solutions to facilitate that KYC? Because in our view, there may not be an impediment right now in securities legislation preventing anybody from actually creating a solution like this. And so I just thought it's a sort of, so while Matthew was talking about digital ID, the sort of eKYC requirements that we need in securities legislation is a little bit beyond that because it's needed for suitability assessment.
Maybe this is a comment over here about whether or not we need to, at least look at those and consider whether or not they're still appropriately calibrated. Okay, I want to pivot actually. So question 12, because this particular question, we received a lot of feedback on the fact that we should do something. So question 12 in our discussion paper said, to what extent would industry-wide collaboration on data portability standards benefit registrants, and how can regulators such as the CSA support this collaborative effort? We received very, very wide support that collaboration to facilitate data portability standards was a good thing and that we should be part of the mix on this. So my question for this roundtable is, how do we do that? What's the best way to proceed to facilitate industry-wide collaboration for data portability standards?
If I may, Mary from Securities. So we've actually created a system that allows that to happen. It's the user itself has full control over everything they've got. And in terms of the different leaders in the industry, they could come in and issue verifiable credentials for every specific user or for every use cases they need. Going back to when we talk about digital identity is, in our belief, is that it's one face, one person, one identity, but you can have multiple personas tied to it. So for example, you can have your medical persona, you can have your accredited investor persona that's tied to that component of it. And then from there, you can create something called a verifiable credential that can be issued by any of the financial institutions, that can be issued by any of the brokers, the dealers, and that information can be shared through privacy-preserving encryption or protocols, where you don't have to necessarily share that component. One thing that we talked about here was about, cybersecurity, centralizing data. Well, if you give the owners, the users, control over their data and what they've got, they can decide how and when to share that data. And if, for example, let's say I'm with RBC's issued a series of verifiable credential on my behalf, and I make a transaction from RBC to TD, well, TD can rely on RBC's verifiable credential in terms of the actual deposit that was made, and they don't need to do any form of due diligence work. So once the fund gets transferred over, it's instantly available. It's not frozen for 5 days. They don't need to run background checks. Where does it come from? Do you meet the requirements and whatnot? And to go back to what Khalil said before, one of the biggest thing is, well, we need that guidance in terms of, okay, this is what it is. And that's where the ambiguity is. Can we rely on verifiable credentials? Can we rely on digital identity? Is this good or not, right? Because we have that tech, and our tech has been vetted by the Hong Kong government in terms of the whole digital identity aspect of it. But here in Canada, it's really hard to get that traction, because when we speak to people, like, well, we don't know what the regulators want. We don't know if you can actually rely on that information.
Yeah, that's a good point of feedback. And I will mention, I think I identified this, but in our comment letters, many of the comment letters included the view that some of our rules, particularly National Instrument 31-103, may create a barrier, or at least is creating ambiguities on the extent that these new technologies can be utilized by registrants. Oh, sorry. We have another comment over here. No? Oh, yeah, go ahead.
And back to Khalil's point, which also comes back to your question about how to create collaboration in the industry. Like, one thing that is really interesting from a consumer protection banking perspective is the fact that your KYC requirements are much higher than in any other sector. And that has helped some of the banks actually, when they're offering GICs through their securities dealer, not having to worry about certain provisions of the Bank Act, because the KYC requirements from a securities dealer when they're offering a GIC from a bank means that they're already complying with the Bank Act. So it's also a question of, when you're looking at how to create collaboration, is to what extent the information that the securities dealer actually collect can help other types of participant in the financial services sector comply with their own requirements. So there may be some type of collaboration there, which is, we're always thinking about what information can be be sent from another provider to a securities dealer, but there may also be some benefit from the other way around, of a security dealer sharing the information to another participant in order for them to comply with their own requirements.
Yeah, that's a really good insight. Thank you. Okay, no more questions on, oh, we have an online. Okay. Yeah, so we have several kind of questions, I guess, and not really comments. Maybe I'll throw out one of these questions here and see if we have some feedback on this one. Will there be clear definitions of raw data versus derived data, especially in the context of securities registrants KYC process? Has the CSA developed or thought about a bright line for these terms? Well, I would say that we are obviously getting feedback that we need to provide guidance in the event of this working. We would have to, I think that it gets to the heart of what phase 2 is about, is we're in the inquiry stage. And so if we were to provide these types of definitions and guidance, we would have to understand, what is the precise definition? Is this a uniform understanding? Is there distinctions in the understanding of what these terms mean across industry? How does it intersect with our rule architecture? So these are questions that we have to investigate. Does anyone have any thoughts on this particular question? Clear definitions of raw data versus derived data.
We'll just point to the existing legislation that defines derived data relatively clearly. I'm sure any crafty lawyer can poke holes in it, but there's still a definition.
Excellent. Thank you, Abraham. And actually, that's a good segue to a question that I do want to add, which is, or just want to ask, which is kind of a general question on the legal requirements. We understand that there's a variety of laws that are intersecting and overlapping in relation to the sharing and the transferring of data by capital markets participants. So we've referenced our rule architecture, so the suitability obligations that registrants are subject to and the steps that they have to take in terms of knowing your client to be able to satisfy those suitability obligations. But there's a whole host of other rules, including privacy rules, the forthcoming consumer-driven banking framework, and certain registrants will be caught by that, the extent that there's opt-ins through that. So within this kind of tapestry of overlapping rules, are there particular things that we as securities regulators, in contemplating a testing framework, because that's where we are, we're not contemplating rule amendments at this phase, we're contemplating a testing framework. Are there things that we should be particularly mindful of to avoid duplicative efforts or creating new frictions in the design of the testing environment? Yes, thank you.
There are, from my perspective, two things that you should be looking at. One of them is the Bank Act, because GICs, HISAs, high interest savings accounts, and PPNs that are bank issued, distributed through dealers, are subject to the Bank Act requirements to the extent that they're being, that they apply to those products. And so if you're thinking about using those products in your project, all of the dealers have had to amend their distribution agreements to make sure that they're complying with the Bank Act requirements. So that is something that you might want to keep in mind. The second one is, there's kind of this general rule that consumer protection legislation doesn't apply to securities dealers. Actually, it doesn't apply to the securities product, like depending on how the provincial consumer protection legislation is drafted. It's either doesn't apply to the activities of securities dealers or it doesn't apply to securities. So if you're again thinking about using a product that is not termed as a security, you may want to look at provincial consumer protection requirements, because they could also apply to that product when you're thinking about setting up a pilot project.
Excellent. Yes, we have another comment over here, and then Abraham too.
Yeah, I think I would come at it more from just a pure functional perspective. Data residency and sovereignty in Canada being a very important piece. If we're having a network that includes validators that aren't the, BCSC or some government agency. There should be very fulsome disclosure on every verification event. I think that's a big part that's missing in a lot of the frameworks right now. And then, as I mentioned earlier, the ability for clear, informed, and revocable consent, but also the ease of the individual to be able to actually use and see the system and understand. It's prospectuses are very fulsome, but nobody reads them. So nobody wants to read a prospectus of how their derived data is going to be used. It's going to have to be very consumer friendly.
Mm-hmm. We also received, in addition to the consent, which is a very excellent point, we received a lot of commonly identified sentiment within the comment letters that we needed to determine the extent of liability, responsibility, recourse in the event of data breaches. So the host of kind of recourse, liability, consumer protection element in any type of, even the testing framework that we put forward was important.
I'd like to go off on a bit of a payments tangent here.
Sure.
I'm a payments consultant, so I can't take that right off. In reviewing the responses to the consultations, I've noted certain respondents making a point around implementing, third-party risk management frameworks in terms of who they're sharing information with, having controls around this, setting up dedicated privacy teams for this, which to me translates into a certain concern about who they're passing the information on to, or perhaps even collecting it from. To which I would add that a majority of the entities that I guess these internal controls are trying to address will be captured, are captured by new payments legislation, the Retail Payment Activities Act, which imposes operational risk and incident management and fund safeguarding frameworks on these organizations. Now, that's live. The registration process closed last November. The Bank of Canada's enforcement powers are coming live on September 8, I believe. So there's a whole swath of these counterparties that certain registrants may have concerns about that will be captured by pretty robust legislation and regulation that is live and that will be enforced this year. So in terms of considering how to craft a potential framework around this, I would say, in addition to the consumer-driven banking framework, to which I have a personal bias, I would also reference the RPAA, which really upskills some counterparties that have been playing perhaps in a regulatory gray zone over the last couple of years.
Yeah, that is an excellent comment. Thank you. And we do intersect with the Bank of Canada through the heads of regulatory agencies. So that's probably a discussion point that we need to think about on that. Comment over here. And then I will mention we are out of time. So we'll take this as the last comment. We're in phase 2. We just started phase 2. So I anticipate that this is the first of more types of engagements where we can continue to gather the feedback so we can design something to get it right, mindful of the need to be agile and move quickly as well too. So
yeah, that was actually where my comment was going. My recommendation would be to build from the ground up. Look at all the different use cases, build in a safe place in your sandbox, build all the things that people are asking for, and then see where it runs afoul of your current regulations. And then you can look at any changes you need to make for it. If you come top down, you'll miss out on the innovative aspects because, it doesn't allow for this, or we can't do that.
Okay, right. Excellent. Excellent. Well, thank you for your feedback. Thank you for those of you attending online. I really appreciate this. We look forward to continuing the conversation and communicating next steps as we move through phase 2 and then phase 3. Thank you. Oh, we do have lunch just outside the conference room. So thank you.